Welcome back, everyone. Next up, we have CBD of Denver. It trades on the OTC Pink sheets under the symbol CBDD and is a full-line CBD and hemp oil company and a producer and distributor of cannabis and CBD products in Switzerland, Europe, and the U.S. Please welcome its CEO, Paul Gurney. Welcome, Paul.
Hi, thanks, Anna, and thanks everyone for tuning in. For those looking at the slide right now, seeing Rockflower and wondering if they're in the wrong presentation, you're not. We are CBD of Denver. We're I like to call us the European cannabis company that no one knows about. Our main brand over here in Europe is called Rockflower, which is why I give the presentation that title. It's much more well known here other than CBD of Denver, which is our listed name. And first, just before we get into it, to give you some background on me, I joined the company March 1st of this year, so a little over a month and a half ago. I spent 15 years on the banking side, mainly raising money for all sorts of different high growth companies. And the last 4 years I spent at the bank raising money, particular for the cannabis sector. Within Europe, I'd looked at over 50 companies in the last 3 years, and I thought this was really the most exciting opportunity in terms of the revenue, the existing business they already had in Switzerland, and the opportunity for growth and to leverage itself to the inflection point here in Europe. So we'll go through all that. I've got a short presentation here, and then happy to take on any Q&A that you may have on the company. So just a quick disclaimer, and want to start off with what our mission statement is for the cannabis sector. And for those of you who are not too familiar with it, it's been a sector that's been characterized by lots of loss making, lots of fits and starts as the sector battles against some regulatory headwinds. But our goal is simple in Europe, is to be the first commercially viable cannabis company in Europe. We're actually already pretty much there, but what we want to do is press our advantage and really become the roll-up story for Europe and known as the go-to in Europe for cannabis. So who are we? To give you a quick overview, we're a wholesaler of CBD products here in Switzerland. We do have a strong retail and branded presence. We do anywhere between 10 and 15 million a year of revenue in 2020. We have not released 2021 yet. We've been operating for 3 years, and we have really strong connections across the entire continent. We've got 800 customers. We're the #1 CBD company in Europe by revenue, a figure that you won't see many places at all. And we're the #1 wholesale company in Switzerland. So we have a very strong position with which to capitalize on as the sector opens up here in Europe across the pond from you guys. So what do we stand for? What's our corporate mission? I define it by 3 things. First thing is an asset-light model. Part of the issue in this sector, it's high growth. There's been a lot of capacity built out on the growing of cannabis and then also on the processing of cannabis, but the demand side has been a little slow to catch up. The problem with fixed cost is it burns money, and if you don't have that money to burn, you go out of business before you get to see the prize. So we are running a very asset-light model in Switzerland. We have a defensible position because of the relationships we have with our customers and our growers. Number 2 is we're going to dominate our geography, and that's Switzerland. Okay, it's 8.5 million, probably 9 million people now in Switzerland. When you think about it, you probably think about what I thought about when I first went there, which was Toblerone and fondue and Roger Federer. Okay, it's a nation that's generated champions. It's a great place to do business. It's affluent. They understand cannabis and the sector, and it's somewhat more friendly towards the sector than some of the other countries. So what we'd like to do is be the dominant player in Switzerland. We're already there, but there's other opportunities for rolling up smaller players who don't have the access to capital that we do. And then lastly, what underscores everything I look at, whether it's acquisitions, whether it's adding new hires, whether it's going into new lines of business, it's always going to be a focus on profitability. I like to see, the potential for growth ahead. And certainly the acquisition we just made is all about growth. But the bottom line is these acquisitions have to support themselves through an EBITDA positive model. So for those of you who don't know what's going on in the cannabis space, we're 4 or 5 years into a few green waves here. Canada really led the pack 4 years ago now, with the first country to legalize recreational. from a medical program. So it's been almost 3.5 years there. It's been a huge success. The market's about $4 billion with a 13% CAGR. And for all intents and purposes, the reason that the federal government did it to take it out of the hands of young people, and then also to increase the quality of all come to fruition. Secondly, you have the US, which is a mixed market. It's medical, it's recreational, it's still federally illegal. There's a number of laws that are working their way through the House and the Senate right now to try and change that. But again, it's regulatory, and you just never know when that thing's going to swing. But a $25 billion market today, believe it or not, and growing at 20%. What do I highlight Europe? If you look out the next 5 years, this is the highest growth market in cannabis. Okay, it's off a low base. I totally get that. The base is growing quickly. The number there you have is about 70% at the end of the decade. But there's tons of green shoots all across the continent, from medical to pilot programs around recreational, to all sorts of things that in the next 2 to 3 years are going to see that number spike up quite significantly. So it is a great place to be positioned. The thing about Europe is there's a lot of the kind of larger cannabis companies in Europe, but they have not made a really big impact or have a ton of market share that they can't be displaced with a better strategy and to be more nimble. So we write down there, can Europe leapfrog the US to legalization? Who knows? But everything we're seeing over here is very, very positive towards our business and what we're doing. Let's talk about Switzerland. The Swiss flag is a big plus. Again, when you think about Switzerland, you think quality, you think standards, you think technical capabilities. All these things are true. Their standards are next to none across the EU. It's a very stable jurisdiction, again, affluent. It has access to the EU single market, and it's centrally located as a prime distribution hub. Our facilities are 5 minutes from Zurich Airport, and right next to a motorway, which can take you east, west, north, south. Talking about opportunities for us and how I'm transitioning the business and what I've put in place in the last 6 weeks with the company is we're going to start going after the German medical market. It's a big medical cannabis market. It's about 300 million euros and growing. It's really the biggest market across Europe, and they're our neighbors in Switzerland. They're just to the north. So we've got a strategy to target European medical. We definitely want a horse in the race in Germany as the government there has talked quite actively about legalization, and it's something we want to be positioned for if and when that happens. A framework just for our company and how I think about the value chain over here in Europe. This is our framework. The box on the left, which is growers. I've said multiple times, we're not going to be a grower. It's capital intensive. We do not have the skill set. It's not what we do. There's a number of amazing growers in Switzerland that we have deep relationships with that I don't want to displace. So we buy from them, and we're the wholesaler, and we've got the customers on the other end that trust us to source product and make sure that it's high quality, it meets their standards, etc. And we're well known for that here in Switzerland. We have two other pillars of the business which we're building out. There's a branded side, and there's also a retail. We have one retail store in Switzerland. But on the branded side, we have our own Rockflower brand, which is a top-selling brand in Switzerland. And then on the retail side, I'll cover in a few slides, is we've just added a technological capability on the cannabis side with a company called Mello that gives us the capability to sell across all the UK, Europe, and even into Asia. So our operation on Rockflower, again, we've got 3 operations. We've got wholesale, which is based out of our warehouse in Zurich, a thriving operation, always active, always busy. A branded side on Rockflower, which you're going to see more from this year, which is why this presentation is branded around Rockflower, because I'm trying to get that name out there. And then lastly, retail. The sale of cannabis wholesale and kind of CBD side is really it's a face-to-face sale. So we do see some strength in having physical stores. We have one store in St. Gallen, which is a university town in Switzerland. It does very well. It just needs a bit more branding and marketing behind it, because this is a marketing business, and we're looking at additional locations for how we can grow this successfully. We'll just skip through some of these slides on leveraging the brand. What are we trying to do across Switzerland? Again, we really want to create this concept of a retail champion. For me, it's about growth in Switzerland. And again, we have a really, really solid business. You can see from our financials, we do double digits in the millions of revenue. We're somewhat profitable. Our margins need to be higher. But when I look across what we do, the way to grow and the way to margin up is really to own this part of the value chain. And we already talk to these people. We have tons of customers that are asking us for more product, are asking us every day to provide more services to them. So there's opportunity to take our margin from a single digit EBITDA margin, which it's tough to make a living doing that, into the kind of 15 to 20% range. And longer term, I'd like it 20, 25% or higher. So everything you'll see this company do going forward is really about adding on the growth to the platform, but it has to be growth that is profitable and is high margin. So then I want to talk about this acquisition, the first acquisition we've made under my tenure last week. It's a company called Mello. They're based out of the UK. We made a share offer for the company. We did not disclose the specific amount, but I'm really happy to have these guys on board. They have 3 different businesses. Number one is as a marketer to a marketplace for CBD brands in the UK, and they do really, really well. Here in the UK, they have all the largest CBD brands signed up, whether it's Love Hemp or Oto, and they have an amazing marketplace where they developed a lot of content. Second is an advertising agency specific to the cannabis industry. And for those brands in the US that are looking to enter the European market, they're second to none, the Grow by Mello. It requires a deft touch because Europe in itself is 28, EU is 28 different countries, the UK is a different country in itself, Switzerland is a different country. Each country has its own rules and regulations around how you can market, where you can market, etc. And these guys can help you navigate that. So they have a lot of great customers out of the US and in the UK that they're helping to do that. And then lastly, the long-term growth engine is this Asia Mello, which they have a retail store out in Hong Kong, and they help brands launch their platform out in Hong Kong and out in the Asian market, which is just emerging as the kind of the next big play in cannabis. So just to talk about the team that we have, there's myself. We've got Gerhard Kruger, who is my COO. He's based full-time in Switzerland, a very, very experienced individual, and he's the guy on the ground. This is a very regulatory heavy and important industry where you have to get things right. You need to understand the rules and regulations. So to have Gerhard on the team constantly day in and day out, ensuring that testing quality and et cetera is up to snuff is an amazing guy to have. We've also got Sylvan there, who's head of retail and is an analytics expert, and he's a phenomenal individual. And we will be adding others to the team here. Obviously, I've just started 6 weeks ago. There's other board members that we need to bring in to support growth. But I'm really, really excited about where this thing could go. So lastly, just want to talk about our share price performance. Obviously, it doesn't look like a very pretty chart. What's happened in the cannabis sector is you've had a huge D-rate across everybody, across every single stock. Last year, we were excited about US federal legalization. The excitement died out. We got excited again 2 weeks ago. But I'll tell you, the constant movement of the regulatory train forward is what's happening. It might be slower than some would like, but every little step helps. And at some point, someday we'll reach that inflection point. So there you'll see we've bounced off our recent lows. We're about an 80 million market cap today, and with potential to do a lot more given the strategy I've laid out. So just lastly, talking about why now, there's 3 things, and I've been through them. Really, the asset light, I think we get this right. We build a moat. We get the defensible position. We can really, really drive profitable growth across all 3 of the different sectors I outlined. We do have an advantaged position in cannabis right now, so we can leverage that. We have revenue that other companies would legitimately die for on the continent, and it's very defensible. And then just lastly, I'm someone who's seen the cannabis sector for 4 or 5 years. I've raised money for every type of company, from the largest to the smallest. I've seen the different strategies they've put in place. I've seen where the sector's gone. I think I have a good sense of how we can win and how we can make this thing, worth more to shareholders and grow quickly. So I really think the why now is there's a scarcity value in what we do. We want to be the European cannabis company because in my mind, there's no one else out there that can match what we're doing. So in conclusion, that's my contact information. Please feel free to reach out with an email if you have any questions or want to discuss anything. And with that, I will take some questions.
Great. Thank you, Paul. Okay. Jack Patton wants to know the recent Mello acquisition. Are there other potential deals in the pipeline? And how do you see the European M&A environment?
Yeah, so it's a great question. So first off, there are other deals that we're looking at in the pipeline. The whole idea around what we're trying to do with this company is we're trying to create an organic growth engine and also an acquisitive growth engine. So we have other things within Switzerland we're looking at. We have other things in the broader continent that we're looking at. And there's a whole constellation of opportunities out there that I think are really, really interesting. What we don't want to do is do too much at once. So the idea is to get Mello, potentially another one under our belt, integrate them, and then build from there. And in terms of the pipeline, if you look across Europe, a lot of companies are looking to exit. They're looking to sell. The pricing environment for buyers is very, very attractive. So we'll talk to pretty much anybody. That's why I say, reach out. If you're in the sector in Europe and you want to strike up a discussion, I'm happy to have a brief chat with anybody just to get things going. But I really think that this is an exciting opportunity to consolidate the sector in Europe.
Wonderful. Kevin Diadamo asks, could the corporation plan change based on the new U.S. legislation, or will the company remain focused in Europe?
Yeah, we're going to be a European cannabis play. So I never say never on the U.S. I would view U.S. federal legalization as really, really positive overall for the sector because these governments are all looking at each other really, and they're trying to see who blinks first or who does what first. So I would see it as positive for us here in Europe. But my take on the U.S. is it's already a fairly profitable sector. There's a bunch of big companies that are already winning there. So I don't really know what our edge would be, but I never say never. There could be something on the technology side. There could be something on Mello that we could do on a cannabis basis that makes sense for us. So from that perspective, yes, on a Mello. But in general, we're going to focus on Europe and potentially Asia.
Right. And Elon Douglas asks, why is the CBD environment different in Europe versus the US? So touch on that a little bit more.
Yeah, so the difference here is over in Europe, CBD is a health and wellness product. And it's legal across most jurisdictions in Europe and the UK. It has been for a long time. Whereas the US market tends to be more directed towards the THC side on the medical and on the rec side. We don't have that option in Europe. So CBD in particular in Switzerland, because you can grow CBD strains up to 1% THC, while the rest of Europe is 0.2%, it allows you to grow some product that's pretty efficacious. And that is quite helpful for people who have, it has a therapeutic effect for people. So from that perspective, in the US and somewhere in other jurisdictions, it doesn't exist because the THC market just swamps it. And you know what? When we get over here in Europe, when we get on the path to legalization, it will be the same. But for now, I try to tell people who say, well, CBD in the US, it's nothing. They tell me about companies, it's not growing. It's way different in Europe. It is a growing market. There's a lot of clinical studies around it. Pharma's looking at it. And so it's a really, really attractive sector from a health and wellness perspective.
Interesting. Steve Gibbs asks, where do you see opportunities for growth in Europe?
Well, everywhere is the short answer. Like Switzerland in itself is a great platform to grow. If you look in Austria, there's great opportunity. Czech Republic, Germany, it's all a great opportunity, right? So even Portugal, Spain, there's all these countries. The issue is trying to do too much at once. So we're really going to focus on our geography and adjacent countries. So countries that we have a border with. So France, Germany, Italy, Austria, what have you, are our immediate targets. The thing that I'm not necessarily excited too much on, again, is the grow side. I think there's an overcapacity of grow in Europe. So we're happy just to partner with the growers we feel have the strongest financial footprint and the best product to be quite frank. But across Europe, there's tons of growth. It's just a question of when the regulatory catches up, and you just have to be positioned for it because you don't know when it's going to happen.
Eduardo Alberto wants you to emphasize these shares. On September 30th, 2021, news was released that announced that the company has retired 13 of its 18 preferred shareholders who had purchased preferred shares issued in the previous years. Can you talk about that?
Yeah, so we've got 10 million preferred shares on issue, so that's fully disclosed. There's a number of the preferred shareholders who have been retired as our efforts to clean up our share structure. We have 20.5 billion shares fully diluted as of our last report. So really, that's just, I call it housekeeping. I get asked the question a lot on what the plan is for the shares and capital structure, and it's something we're working on. 20.5 billion shares outstanding is a lot. It's too many, and there are things that need to be done. But the priority right now is bolting on a few of these acquisitions, getting the growth engine humming, and then we'll take a look at what the right capital structure should be.
Rudy Bird asks, when will the yield sign be removed from your symbol on the OTC markets?
Yeah, great question. I got asked this last week. We've had a slight delay on filing our financials. We have filed for an extension. It'll be done within days. So that's not a concern to me.
Okay. Al Nguyen asks, can you talk about your recent acquisition of CBD e-commerce Mello, and what was the cost in cash and stock or debt, and what do their numbers look like?
Yeah, so we didn't disclose any details of the acquisition. So in terms of cash and shares, whatever, I cannot disclose. I said on the acquisition call last week that the dilution will be less than 5%. So I'll let people who are listening in figure out what that might be and play around with the number. But what I will say is Mello has really impressive growth numbers, and with some growth capital, I think we can accelerate that. So we're in the process of closing the acquisition and then integrating it. Once we close the acquisition, we'll be out with some forecasts, et cetera, that we can give to the market. But for now, I'm not in a position to do that.
Jerry Brady says you have limited info on the Pinks. What are your current and annual or most recent quarterly level revenue, earnings, cash on hand, debt, assets, and liabilities?
Yeah, our last filed financials are Q3. Our Q4 is delayed, as just mentioned. And our audited financials, the Swiss audited financials are done. So we're just in the process of working through the US side. And obviously Q1 we're closing out. So Q3 is the last one you can look at. And I can't say what Q4 looks like. I'm hoping to be able to release all of this in relatively short order. Again, part of me joining this company is it grew from 0 to 14, 15 million plus of revenue in the span of 2 to 2.5 years. And when that happens, when you have that fast growth, you don't necessarily have all the systems and stuff you need in place. And that's a process that we're going through right now. And it's just part of growing. It's growing pains. Any company, when it goes to 10, 20 million of revenue, you need to have things that are in place, and you need professional management. And that's what we're doing. I've told every shareholders, whatever, we're committed to providing more transparency and more data. They just need to bear with us for a few more weeks.
Lisa Schmidt asks, is your growth model organic or by acquisition? Can you expand on each?
Yeah, so this is a great question. So right now we have one core business, which is wholesale. We have retail. Okay, so wholesale is going to be driving 80 to 90% of the number, and retail's 10. That's the organic growth. If you think about Mello and other things we're going to be buying, that's the acquisitive growth. I would think going forward, it's going to be a 50-50 proposition in my head, the way I've worked it out. Wholesale is still going to continue to grow organically, but in order to get that supercharged growth, we have to buy some things. Again, that's not necessarily going to be acquisitive growth though, because these companies need capital, they don't have it. As a public company, we have access to capital, so we can actually put the investment into them to make the growth turn from acquisitive to organic. So in time, we'll all be organic. It's not going to be one of these total roll-up stories where we just buy companies left and right and you can't tell what the growth algorithm is. No. When we're ready, we'll provide guidance to the market. We're not there yet, but it will be a mix of organic 50-50 with acquisitive, I would say.
Chris Gray asks, what's your current authorized, issued, outstanding? And is there convertible debt that is holding the stock down? And any talks of a reverse split or share buyback?
Yeah, so no share buyback. Our total authorized and outstanding is just 1 second is 5.5-ish billion. Okay. From the perspective of capital structure, is I can't comment on specifics on what we're looking at. We're looking at all options. I've said it a few times in the past like 3 weeks. I get asked by a lot of people, and I get it. But I can't really talk about whether we're looking at a reverse, or we're looking at NASDAQ, we're looking at whatever. Like these aren't things that have been decided. But I will say, from the perspective of cap structure, there's things that I'd like to restructure within the company which have already been done, and there's other things on cap structure I'd like to do. And in time, we'll tell the market what we're doing. But understand, from my background, I spent 15 years in capital markets, working with large companies and small companies, fixing up share structures, consolidating things. Like, I know how to do this. It's just I'm 6 weeks into the job, and there are other things that needed to be sorted out first, and those have been sorted in short order. So now we can really take a focus on cap structure and what's the right way forward.
Combining a question from Larry Ilian and Bobby Williams, how's the audit coming, and how's your NASDAQ uplisting coming? Are you still on track?
Yeah, so like I just said, we haven't mentioned if we're doing a NASDAQ uplisting or not. So how it's going is just no comment, I guess. On the audit, the Swiss audit is complete. Okay, so that part's done. Now we move into the US audit. It's moving forward. So again, within a kind of month or two, that should all be complete. It's done. Okay, so it's not a concern to me. It's been signed off on. It's just for now, it's a process and getting through it. And again, when I look back at the company, it grew really, really fast. And when you grow fast, when you're doing 15, 16 million of revenue, when you have certain accounting systems in place and whatever, it takes longer to go through all this paperwork and set it up all correctly. And the plan is, going forward on the quarterlies and on the yearlies, we're going to have a system in place. So we're going to be like any other company, so we can file on time and with immediate effect.
And Mike Nunez asks, how many locations do you have, and how much is that expected to grow over the next 12 to 24 months? Plus, what's your average sales and profit per location?
And we haven't disclosed sales and profit location. When we talk on retail, we now, like, Mello has a retail store in Hong Kong. Our other retail store is in Switzerland, so we have two. The idea in Switzerland would be to grow that opportunity. We've brought someone in to take a look at, we've just hired someone to take a look at how that looks. Is that 4, is that 5 locations within Switzerland, in Austria, which is just across the border from our other retail opportunity? I think of it as like, how much can each of these retail locations do in sales? Can they do $500,000 to $1 million with a 20 to 40% profit margin? That would be wonderful. I'm not saying that's where we are, but I think of it as like, when we're modeling this, we need these things to be doing $500,000 at least to be worth our time. And then we're going to have an online component to it as well, which is why we've hired Mello to build that capability out.
Great. And do you have any final remarks?
Yeah, I would just say, like, stick with us. I'm 6 weeks in. You've seen the Mello acquisition. There's more news to come. There's lots of stuff we're working on day in and day out. If you're looking for a European cannabis play with growth potential and leverage to what's happening here in Europe, we're the name. We can't be beat. I'll leave it there.
Awesome. Thank you so much. It was a great presentation. Please come back in the future and give us some updates, Paul.
Would love to. Thank you.
Okay. Stay with us, everyone. We're transitioning to the next presenter. We'll be right back.